Hello, everyone. Good morning, good afternoon, good evening, and good day to you all, anywhere you may be joining us from all over the world. This is John Consulting, the strategic business growth support partner. So, we just brought you a live streaming now on payroll compliance masterclass. So, for all business owners, entrepreneurs, professionals, HR professional, accountant, finance manager, and those that are doing one or two things with payroll. So please, you need to check out all these videos on our YouTube channel. We have streamed over 260 videos, and they are practical, valuable videos that when you apply into your business, it will transform your business. And of course, we are always here as your strategic business growth support partner. So reach out to us on any of our professional services. We are always available for you. And please, if this is your first time of joining us on this live streaming, please do well to subscribe to our YouTube channel, like our videos, and share with other business owner entrepreneurs, professionals around you. So in today's live streaming, live financial health check for SMEs, live financial health check for SMEs. So is your business financially healthy? You need to find out in this YouTube live streaming today. So welcome to Tojon Consulting. Your business suddenly lost 30% of its revenue tomorrow. If your business lose its revenue, would you survive it? Would you survive it if you lose it? Will you survive it? So that is a very thought-provoking question you need to ask yourself. Can you confidently say that your financial records are accurate? Your cash flow is healthy? Can you attest to it? Can you attest to it that it is healthy? So you need to watch out for that. Your taxes, are they compliant? And your profits, are they growing? So many SMEs owners work hard every day but have little visibility into true financial health of their business. They have little, they don't know much about their financial health for their business. So in today's live financial health checks for SME, we will walk you through a practical assessment framework used by financial professionals to evaluate the financial strength, stability, and sustainability of a business. So please, if you are watching us live right now, please do well to subscribe to our YouTube channel, give this video a thumbs up, and share with other business owners around you. So in today's live financial health check for SME, we will walk you through a practical assessment and framework used by financial professionals to evaluate the financial strength, stability, and sustainability of a business. So by the end of this session, you will be able to identify financial red flags, measure key performance indicators, and determine whether your business is financially healthy or needs urgent attention. So this is very important. So let's get started. All right, thank you for joining us. We appreciate you. What is financial health check? What is financial health check? You need to understand what financial health check is all about. A financial health check a comprehensive review of your business finances to assess one, profitability, cash flow positions, liquidity, debt exposure, compliance status, operational efficiency, financial sustainability. This is very important indicators. This is very important indicators that you need to take note of. Just as individuals undergo medical checkups, Business need periodic financial assessment to assess problems before they become a major crisis. So a financial health check helps business owners make informed decisions and improve long-term performance. This is very important for financial health check. Why businesses and SMEs need regular financial health check? Why is this financial health check? Why is it important? Many SMEs focus only on sales. However, sales alone do not determine a business success. So you need a regular financial reviews which will help you to detect financial problems early, improve cash flow management, reduce business risks, enhance profitability, improve budgeting and planning, increase investor and lender confidence. So this is very important and you need to watch out for it. So businesses that monitor their financial performance consistently are generally better positioned to adapt and grow. So financial health check area one on financial check, cash flow assessment. So so you can see that cash flow is very important. So it is the heartbeat of every business. So here you need to ask yourself a very important questions. The number one question is that do you have enough cash to meet obligations? Are customers paying on time? Are suppliers being paid as agreed? Do we maintain an emergency reserves? So the warning signs that you need to take note of here is this: frequent cash shortages is a warning sign, delayed salary payments, excessive borrowing, difficulty paying suppliers, then constant overdraft dependence on loans, debts. So the health indicators that you need to watch out and improve on and do is: number one, positive operating cash flow is a healthy indicator. Timely payment of obligations either to your suppliers, to your employees or other stakeholders. Adequate cash reserves is a healthy indicators. Then predictable cash inflows is a healthy indicators. So remember that profit does not pay bills, cash does. So the financial health check area 2. So here your business should generate sufficient profit to sustain growth. Yes, so sufficient profit to sustain growth is very important under this profitability review. So you need to review your revenue trends. Is revenue growing? Is it stable or is it declining? Under this revenue trend, you need to watch out for it. Then your gross profit margin. Under this, you need to ask, are you earning enough after direct costs? The operating profits, you need to ask, are overhead costs consuming profits? Then under net profit margin, you need to ask, how much profit remains after all expenses? And here are the warning signs. Increasing sales but declining profits is a warning sign. Shrinking profit margin is a warning sign. Then rising operating expenses, and of course uncontrolled cost growth is a warning sign and you need to avoid it. So healthy indicators under here is consis ten t profitability is a healthy indicators and you need to keep it up. Improving margins, controlled expenses and sustainable growth is an healthy indicator you need to keep up with. Then the financial health check area 3. is your liquidity assessment. So under liquidity, this measures your ability to meet short-term obligations. Ability to meet short-term obligations. You need to review this liquidity assessment. And the question you need to ask is, can we pay bills when due? 2, can we meet payroll obligations? Then 3, can we settle tax liabilities on time? And here are the warning signs under this liquidity assessment. The number one is consistent or persistent cash shortage. 2, increasing unpaid obligations. Then 3, supplier pressure. Then 4, late tax remittances is a warning sign and you need to avoid it. So the healthy indicators under this liquidity assessment is this, and you need to keep it up. 1, adequate working capital. Then 2, timely payments. And then 3, stable cash position is an healthy indicators that you need to keep up with. So the liquidity problems often appear before profitability problems. And then the financial health check area 4 is debt management review. Debt management review. So under this debt management review, debt can support growth when you properly manage it, no doubt. In fact, we have brought you a video on debt versus equity. Which one should business owners and entrepreneurs choose to finance their business? So under this debt management review, you need to check, can debt support your growth and can you properly manage it? So, however, excessive debt can create financial stress. Yes, debt can support growth if properly managed, but if it is excessive, it can create financial distress, pressure, trauma, difficulties. So you need to evaluate existing loans before you take another new loan. The outstanding balances, your interest costs, you need to evaluate it, and your repayment schedules is very important before taking another debt. Check out for the one that you already have and how you have performed on it. So the key question you need to ask here under this debt management review, is debt affordable? Is it affordable? Is debt generating value? Are repayments manageable? Can you manage it? And here are the warning signs. Heavy loans dependence is a warning sign. If you are depending only on loan, is a warning sign. High interest burden is a so loan default is a serious area of concern and you need to do away with it. So the healthy indicators you need to keep up with under this debt management review is sustainable debt levels, consistent repayment, positive return on borrowed funds. This is a very good one that you need to keep up with. So the financial health check area 5, tax and regulatory compliances. Thank you for staying through on this live streaming. Please, if you are joining us for the first time, do well to subscribe to this YouTube channel and give our video thumbs up and share with other business owners around you. So in area 5, financial health check, tax and regulatory compliance. So financially healthy business maintain compliance is an asset. Compliance protects you. It improves your reputation and your goodwill, and you need to keep up with it. You need to keep up with it. So the financial healthiness maintain compliance, and they review 1, tax compliance, company income tax, value added tax, withholding tax, payee, statutory compliances, pension obligations, NHF obligations, and employee compensation obligations. They watch out for it and they comply. So the warning signs under these compliance obligations is outstanding tax liabilities. If you're having consistent outstanding tax liability, is a warning sign. Regulatory penalties, mistakes, poor documentations, sign, and you need to do away with it. So the healthy indicators here is timely filings is an early indicator. You need to keep up with it. Then we also have accurate remittances is a healthy indicator. Keep up with it. Proper recording keeping is a healthy indicator. Keep up with it. Clean compliance history is a healthy indicator. You need to keep up with it. So in area 6, financial health check is financial record quality. Financial record quality. So under here, you need to ask yourself, are accounting records current? Are bank accounts reconciled? Are financial statements prepared regularly? Do management reports exist? You need to ask yourself important question. So here are the warning signs you need to avoid. Missing records, unreconciled accounts, delayed reporting, inaccurate data. You need to avoid it. Then the healthy indicators here is this: update bookkeeping and accounting record, regular reconciliations, monthly management reports, reliable financial statements is an healthy indicator, and you need to keep up with it. So you need to rate yourself 1 to 5 for your financial health check scorecard. So rate your business from 1 to 5 in each category that we have mentioned. The area 1, the cash flow from 1 to 5. What is your scorecard? Profitability, liquidity, debt management, compliance, and financial records. You can rate yourself and know what your scorecard will look like. So the interpretation here is that 24 to 30 points excellent financial health. If you rate yourself in each category 1 to 5, 18 to 23 points good financial health with improvement opportunities. Then 12 to 17 points moderate risks, immediate attention are needed, and if it is below 12, it is a high financial risk and it needs urgent intervention immediately. So take a moment during this live session to score your business honestly, because it is a practical live session. So this is how Tozon Consulting can help you. At Tozon Consulting, we help SMEs conduct financial health checks, improve cash flow management, design budgeting systems, strengthen internal controls, resolve tax compliance issues, improve financial reporting, prepare management accounts, support business growth. So our objective is to help businesses become financially stable, compliant, and profitable. So as we close this live streaming, a financially healthy business is not built by chance. It is built through consistent financial discipline, proper planning, accurate reporting, compliance, and effective cash flow management. The earlier you identify your financial weaknesses, the easier and less expensive they are to correct. So use today's assessment framework to evaluate your business and begin taking corrective actions where necessary. So these are also actions on this live streaming. If you found the video very valuable on this financial health check, please do well to like this video, subscribe to Tozon Consulting, our YouTube channel here, turn on your notification bell Share this session with fellow entrepreneurs, business owners and professionals around you. And in the comment section, answer this question: which area of your business needs the most financial improvement right now? Is it cash flow, profitability, compliance, or financial reporting, or even record keeping? So thank you for joining us on today's live streaming. We at Ozone Consulting, helping SMEs build financial strength, achieve compliance, and drive sustainable growth. We see you in another live streaming session. Bye for now.